Okay, so in this video, you're going to be able to determine what your daily bias is and how to trade alongside of it. The reason that this is important is because you need to understand what trend the market is pushing in and how you can trade alongside of it. So, as you guys already know, or if you didn't know, I trade London session, which is from 8 a.m. It starts at 8 a.m. I trade London Stock Exchange open. Um, and the time frame you need to be able to determine your daily bias is the hourly time frame, and all you're gonna do is find out where was the nearest break of structure prior to the market open. So if I go right here to today's trade, we broke structure to the downside right here. So I already knew I was mainly looking for sells. That's literally it. That's how you find your daily bias. It's literally the hourly break of structure. Where was the closest break of structure? Was it to the upside or to the downside prior to market open? And then once you've done that, you'll find your daily bias and you'll find out where market is probably going to head to. I'm not going to say 100% because nothing again is 100%, but that's how I find my daily bias. Even better, from what I've kind of discovered, is that you'll be able to understand if you're trading a retracement or an extension. And what I mean by that is, for example, let's say the 4 hour is running bullish, yeah? Within the downtrend or these retracements down, this is the hourly, 4 hour hourly. These lines down are the hourly, yeah? And the lines up are the 4 hour. So the 4 hours running up and the hourly is just retracing, that's all it is. So if those two align, you have close enough to an A plus setup once you have the confirmations, which I'm going to teach you later in the boot camp. So now that you kind of went over that, because we broke structure to the downside on the 4 hour right here, and then on the hourly near market open, we broke structure to the downside again. 8 a.m. I'm gonna just put 750 for a sec, because that's where it kind of is, but I'm gonna move it. We broke structure to the downside to the 4 hour here, hourly down here. So you already know that you're playing an extension play. So what I genuinely thought was gonna happen was this move that's happening now at market open. Obviously after we sweep the highs, but we didn't get that. Instead, we pushed up kind of further and then came back down, which is fine. We still found a trade and we still won, so I'm not really gonna complain. So yeah, that's how you find your daily bias. You just find out the nearest break of structure to the downside, and then you go into the 4 hour to determine whether you're trading an extension or retracement. An extension again is just the bigger move up. So if you're in a bullish narrative, it's literally these legs move up, retracements on the leg move down. So if the 4 hours running bearish and the hourly is running bullish, the hourly moving bullish is just a 4 hour retracement. So you can gather that all that's going to mean is that it's going to price is trending bullish on the 4 hour, and then this is what you're trading. This leg move down, and it's hard to trade that because you don't know how far price is going to retrace. So for example, it could run in a bullish trend high, high low, high, and then higher low, slight, and then higher. That's why it's kind of hard to trade. That's where I like to de-risk myself pretty personally, because like just over time of what I've seen. So yeah, you literally just learn how to do your daily bias, especially if you've listened to my market structure video. All it is just the nearest break of structure, whether it be to the downside or to the upside, and which is prior to market open. It has to be prior to market open. And obviously if price breaks structure to the upside, that means the trend may switch bullish for a minute or a bit. But again, what's the 4 hour saying? Bullish again. I remember what I said about retracements. Look what the daily saying. The daily broke structure to the downside. So all that move up was just a daily retracement. That's it. Higher time frames hold higher power. But of course we've learnt about that in market structure video. So that was mainly like you could say a refresher. So we can go to yesterday, 7:37. 8 a.m. perfect. Okay, cool. So prior to market open, we broke structure to the upside. And I remember, because I actually took a trade this day. We broke structure to the upside here. So when market open, we can anticipate that we want to see a sweep of liquidity on the 15-minute. And then see like some move up to the upside. Again, remember the 4 hour was bearish, so you know the up move wouldn't have lasted long. The only move which would have lasted like a decent amount of time was a short, and you would have been able to find that after switching biases, because what happened at market open, we broke structure to the downside. So you gotta make sure that within like, I think it's from like 9:15, there's another hourly close on German 30. So if you like to, you could. I don't trade. Actually, no. Let me think about it. I don't trade at 9:15. Sorry. There's another hourly close at 8:15. Sorry, there is at 8:15. So there's another hourly close at 8:15, which is this candle. So prior to this, you would have been bullish, but look what happens here. We closed bearish, so you already know you're looking for sales. And the way I took a sell was literally from this fair value gap here. But we'll get onto that when we talk about my continuation model. But yeah, that's how you'd find your daily bias here. And sometimes you may see my channel that I say, oh, I'm invalidated until this happens or that happens. I'm literally just pinpointing where price could break structure to either the upside or downside, depending on where I want to trade and what my daily bias is. Cool. 7:15. Let's go to Wednesday. I think there was news this day. I don't really know, but let's just do it anyways. So we broke structure to the downside right here. So on the 15-minute time frame, we're going to look to point out liquidity, which is our point of interest, and then we're going to find ways to look for a sell. So we broke structure down to the downside here, but we ended up pushing up and then kind of chopping around here. Yeah, but anyways, yeah, it's literally just a break of structure to the downside. Where was the nearest break of structure? And it was literally at market open right here. So you can anticipate that price may head down lower. I can guarantee you could have found like a short-term move. Yeah, like this short-term move, but obviously none of this like hit my boxes when I wanted to take a trade or confirmation to take a trade. But you could have caught like a small move. Go again on the hourly time frame. So let's go on to 7 right here. 7:15, cool. We break structure to the downside from where? Where? Is it here? Is it here? Is it here? It's here. So what you're gonna do is wait for a super liquidity again, and look what happens. Boom, down. All it is just the recent break of structure prior to market open. That's it on the hourly time frame. And then you go on a 4 hour to determine whether you're trading a retracement or an extension. A retracement doesn't usually last long. There's a high probable chance that price may reverse onto you, so you need to find out where key point of interest, whether that be a fair value gap, order block. Go over here as well. 7:15. Look, we broke structure to the upside here. What are we on Friday? Bullish. Look what happens. Get like a big up move here. 7:15. And I'm not saying your daily bias will always work, but it's good to have one because you'll be able to determine like where you want to place a trade and where you believe price is gonna go. Literally for the day. That's it. Okay, that was before market open. Before market open, it was actually bullish. Wait, were we bullish? Did we break structure here? Yeah, we did. So we broke structure. I don't know if you can kind of see that, but we did actually break structure to the downside here. So you would have found out your PRYs, and then look what happens after for the day. Well, not for the day, for like a few hours. Price came down, and you could have found a trade off that. I could find another one here. This is kind of more obvious to see with our strategy. So we had a break of structure to the upside right here. even sweep over this hourly liquidity here, and look what happens. You get like a big move up, and you could have found a trade after that. Okay, I can do this like a few more times. 7:15. Obviously, it's not actually 7:15. You need to go on a 15-minute and put it on actually at 8 a.m. But obviously, the hourly time frame won't allow me to do that. So we're gonna have to just work with what we got. This is another example where you need to switch biases though. So we break structure to the upside here. So you anticipate that you're bullish for the day. So you'd mainly look for buys. Then look what happens. We break structure to the downside here. This is literally my continuation model just happening right in our faces. We have this fair value gap here. This for continuation back down. So all you're doing is just finding out where the nearest break of structure is. Mainly on the hourly time frame, and then you're going on to the 4-hour to see whether you're trading a retracement or an extension play, and that's it. And if you struggle determining like whether you're bullish or bearish, just go back to, not bullish or bearish, but with break of structure, go back to my break of structure video and just watch that. But that's essentially how you find your daily bias and how you switch daily bias and how you trade with it. So yeah, within these boot camps, it's going to get a little bit more advanced. Just because I know a lot of people in my Discord, they know a lot of this stuff. But I want to make this video for the people that don't know this stuff. So yeah, thanks for watching.